and identifying good deals in the stock market. Well, in this video, we're going to go over the top stocks for this week in our Sunday stock talk. So this is the day when we peel back the curtain. We look at the top AI companies, the top space stocks. We're going to touch a little bit on nuclear. One of the things that separates people that have success in the markets from those that don't, it's going to be preparation. And the other thing that separates them, and if you guys hear any noise or anything like that, I was just playing pool with my dad. He might be hitting pool around. We're in an Airbnb here in Los Angeles, and I'm here for the next few days. Again, to come out here and for a short time get to visit with my dad, and my wife and I are traveling a little bit right now, so we're away from the place in California, but I still want to do the Sunday stock talk because there's a lot of movement in the market right now. And one of the things that separates people that have success in these markets from those that do not, or just success, I guess, financially with these companies, investing in them. Most people, like, number one that will keep you broke if you're investing or not investing is as soon as you get money, it's going to expenses. So you're just not investing money. You're getting money, you're paying bills. That's one way. It's like a transfer. Like every time you get paid, it doesn't go into things, it's a transfer. The second thing is, the second way, and this is usually middle classes, you buy things to impress people, you buy things to look good, or you buy things you don't necessarily need with the money that you get. I'm going to assume that if you're in this video that you're trying to invest, you're already looking at this, which is number 3, which is this is what the rich people do, is they invest and then they spend. So as soon as they get money, they're saying, how can I turn this into more? And so today we're going over those top companies, the top AI companies, tech companies that are growing right now in this market. So comment in the chat if you're here. We're going to jump right in. It's a live video, and we're going to go over some of these top stocks right now. And again, we're kind of on the move, so you might hear some sounds. I think my wife just got back from going to, I think she went to the mall or something. All right, so let's jump in, and I'm going to take a look at the chat, and we'll get into this. So the first stock I wanted to cover was Oklo. So Oklo is a nuclear company that was originally backed by Sam Altman. So the founder, the CEO of OpenAI. So OpenAI is one of the main companies. And I think my wife might actually... Sorry guys, I'm going to actually open this door. 1 second. There you go. No problem. So guys, Airbnb, sometimes we forget the codes. So that can happen where you forget the codes. So now she's in. So I wanted to jump in, make sure that we are covering Oklo. Sorry, it's taking a little bit. So the first company, Oklo, that we want to focus on here is going to be kind of backed by Sam Altman. So I'm going to go over to our nuclear stocks. And one of the things that's happening, with AI, what is the main purpose? Or let's say you have a big growing market. What happens whenever you have a successful business, something that's growing, or you have a successful market? What does that usually mean? It means there's a lot of energy going into it. And so AI requires a good amount of energy. So Oklo is a nuclear company that specializes in the pursuit of building nuclear for powering AI, so powering data centers. We recently saw their uptrend. They really rocketed up to 85 a share, pulled down to about $60 a share, and now they're at the support, previous resistance. And Oklo, if we take a look at their sites, I don't believe they have their stuff out yet. I think they have some prototypes. They have some of these the diagrams out for their technology, but I think they're even pre-revenue. I don't know that they've actually made money, but they have these vertical setups with a reactor that goes deep in the ground. And the idea here is that they're focusing specifically on powering AI. So you can see there, it's an OpenAI co-founder, Sam Altman, stepped down as the chairman in April 2025. However, these original growth factors are still seeing a lot of investments from institutions. And also, they've raised about $800 million. So they got $730 million in assets. And their net income is negative about 24 million a quarter. So financials not looking there yet. And that's why I wanted to cover it. A lot of people are really excited about this company. We see them pull down recently. I think that they got a long ways to go. We could probably see them be a good, very, very long-term play. But when you look at the newsroom and how things look, I mean, they were just selected on August 13th as the U.S. Department of Energy's reactor pilot program. So basically, nuclear is what is powering, what most likely will be one of the focuses for powering some of this new infrastructure that the U.S. is building. They're doing wind, they're doing solar, but nuclear is something that's being explored right here. So this company, Oklo, is developing pretty heavily. Now, the other thing we got here with their chart is their support at $60 a share. A lot of people said, well, are they going to continue up? Is this like a buy now moment? I wouldn't say so. They're kind of selling down at the moment, push below that EMA. Sometimes they can hold below the EMA and then recover and continue their trend. A lot of times, though, when they break below that EMA, they continue to sell off. And we've kind of seen that here. They broke below the EMA. We might see them sell back down some more into these levels of about $60 or even further. So as far as being a really good opportunity for you to buy or anything like that, that's just one I want to go over because a lot of people are asking questions. Okay, so let's get to the next one. Keystone's here. What's up? Keystone, Elvis, Eric. We got Eric here. Jose, what's going on? MD Akramol is here. What's going on? Eric says, keep your money in the account, folks. Don't buy anything else. Eric says sometimes it's good to get away from Cali. I'm actually still in Cali right now. I'm in a different part of California. I'm in Southern California, in LA right now. Keystone says, I invest everything. So yeah, I mean, that's kind of a key, right? Investing rather than just spending or buying to impress or things like that. Johnny says, what's up, people? So what ticker symbols do you guys got for us to take a look at right now? Q's family says NNE for nuclear. Let's take a look. NNE. They're already on our watch list. So NNE recently pulled down from this resistance level. They were up at $43 a share, and they pulled down through August down to this level here at about $28 a share, and they've had this consistent uptrend. NNE. Now they're on our watch list. Let me take a look at what that looks like. I think there's a reason they're on our watch list. Let's see. Revenue, net income was negative, but they also have a balance sheet that's building of about 230 million. $1.3 billion market cap. The problem is if you're buying any nuclear companies, like you got Oklo, you got NNE, you got SMR, you're kind of buying the future. You're buying what could be, because a lot of them have really good amounts of cash for continuing to grow their companies, but they don't have revenue yet. So they're kind of risky investments, you know? So that's the only part with nuclear. But when it comes to nuclear, you do see some US investments continuing. We just see the White House here in the Oval Office, and the co-founder and CEO of Oklo, they're actually in the White House. So you see Donald Trump sign an executive order advancing nuclear energy policy back in May. Pictured our Interior Secretary Doug Bergman, Defense Secretary. So they're getting involved in the nuclear space. So that's kind of what is driving some of the growth there. But yeah, I mean, Q's, when it comes to NNE, financials don't look that favorable on an income statement wise. Long-term perspective, balance sheet is good though, so there's no immediate danger. When it comes to the info line, if they're going to continue to hold this uptrend, this is the type of trend we'd like to see. They've been in this trend for basically 2024, and we're looking for them to maybe make a bounce here, Fred. So something like this, I think that's Fred Q's tune in there. Something like this, around this support level, there's a rising support level. So maybe up into this $35 to $40 range, we could conservatively, that would be more of a bullish but conservative outlook. Something like this, about a 30 to 50% increase in the stock. So NNE, it's got that margin for profit. Now, if they are gonna, if you're trying to manage risk and you didn't want to, let's say, hold a lose or something like that, the support level is at $28. So really, if it drops below about 2 to 3%, you're going to be looking at what could be a potential sell at that moment. So just keep that in mind. Somewhere around like that $28 range, you see it sell below there, Fred, it starts to become more of a sell because it's breaking pattern. But as far as what you'd look for, between a 20 to 50% increase, it's quite the type of trade we'd like to see. The only problem is you have the greater market working in your favor. You have the balance sheet working in your favor. You have the overall trend working in your favor. You have the Fed coming in with some announcements this last week that pushed the market up. So the market is doing good right now. So you got that in your favor. But what you don't have in your favor is this is the downside. The risk with NNE is that they're a nuclear company. They don't have the revenue yet. So if they don't have the revenue, it becomes pretty risky. So you see their balance sheet good, but that's the only thing of why you'd want to have more of maybe a conservative approach to a company like that. Johnny says BWXT. Take a look at it, and Ron will take a look there as well. BWXT. So BWXT is at almost an all-time high, Johnny. You see it get up into that $189 range. It's been really just rocketing up, almost parabolically up to that 190, and had a low of 84 in April, and then shot up to 190 by August, and then sold down here. Looks like the overall trend looks something like this, a little bit less risk than about a week ago. You can see this overall trend here, that it's building out and trying to hold this rising support level. Kind of see that level. Maybe with discounting that big spike up to 189, you could see maybe a little more of an overextension still, where we could see this sell down into this 154, another 5% sell down potential. Would make a lot of sense just from a conservative outlook. Maybe a little more conservative, but yeah, about 2 to 3% sell down there. Now, what is BWXT? And if they do get to that level, what does the margin for profit look like? At least that's when I would look to buy if we were going to buy them. We're looking about a 10 to 20% margin for profit if they continue in the trend that they're in right now. So you kind of see that uptrend. They are selling off recently, but yeah, looks like maybe just a conservative play would be a little bit more of a sell down anticipated. You can see the RSI, the MACD still kind of on their way down, kind of crossing down. MACD never really got into a buy territory since that big push up, maybe right here for a second. But yeah, so 20% margin for profit there, BWXT. And BWXT, Johnny, what is it that they do? Let me know. BWXT, $14 billion market cap. Looks like they focus on technologies for fuel. And nuclear components. Okay, so nuclear. Now, this is a company that is BWXT is BWX Technologies. BWX Technology. So they're actually in nuclear, advanced nuclear innovation. And what's interesting about this company is they are doing naval nuclear reactors. So they've been manufacturing these like basically submarine nuclear powered submarines. They got about 400 plus of them that they've created. Commercial nuclear power equipment. And this is an energy company that has a focus on some of the markets that would make sense for us to see growth. They're actually already having revenue of about 600 to 700 million and increasing quarter over quarter with a positive net income. So this is the first nuclear company that I think we've covered extensively that has an actual revenue stream. You can see annually they're increasing their revenue to almost 3 billion a quarter, on track to do over 2 billion for sure. Really, maybe up to 4 billion this 2025. And then the balance sheet, so revenue's up 12% year over year, net income's up 7%. Balance sheet 3.7 billion in assets, and liabilities at 2.5 billion. So basically, operating at a net positive cash flow, PE ratio tad high at 50, but a $14.9 billion company, probably because they're in such a high growing market or fast growing market like nuclear. So they're doing naval nuclear, and they got a lot of contracts, it appears. It looks like they're working with 20 major operating sites in the US, Canada, and the UK. They work with the US Department of Energy and NASA. And so, kind of an interesting trend. They just pulled down recently, now looking more like a buy here once they get below this 160 range. Or even they could hold and continue. That would be pretty hyper bullish. But what we'd be looking for the trend, maybe a little bit more of a sell down, even a retest down to 156, offering about 10 to 20% margin for profit if they continue in the direction that they're going. So yeah, it's a good one. It's a good one, Johnny. Thanks for calling it out. Yeah, and I actually do like this, so we'll have it on our watch list, and we'll be checking it there in StockMate at Market Open tomorrow and see if any opportunities present themselves. If you guys ever want to join our live sessions in StockMate, it's the second link in the description below. Special sale for you there, so go take a look. Keystone, so Giant Pumpkin says, what do you think STRL financials stock? Sterling Infrastructure, Road and Highway Builders, $8.5 billion market cap. They're doing similar revenue to the company we just saw. So they got about 600 million in the last quarter, positive net income of 70 million. So the balance sheet is also pretty similar. Total assets up to 2.16. Actually looks very similar. So positive. The PE ratio is lower. So this company maybe has some more potential to run. And it looks like STRL, Sterling Infrastructure, is focused specifically on solutions for infrastructure for the main things that allow the economy to run. So transportation solutions, they're working in building solutions, a lot of construction, which probably is why we see their liabilities a little bit higher, up to that 1.25 billion. Their liabilities are a little higher. Not bad. Their assets are growing more than their liabilities, but they're a little higher, which is common in infrastructure companies. Looks like they're building in Texas pretty extensively. Ron says UEC. Okay, Ron, I got you. Jose says UEC. We take a look. Thank you for tuning in. Thank you. So when we look at the Sterling financials, they look pretty good. They also recently pulled back with the greater market. So kind of a similar pullback. This is the type of trend we'd be looking at with Sterling STRL. You can kind of see this trend really since about April of this year. So they've been on a very consistent uptrend. You see higher highs throughout. They've had this holding above the 200-day moving average, kind of drop below a little bit, which is fine, but seeing them kind of maybe try and continue that upward direction. So this is the level that they're at now, which we do like to see that pull down and kind of validate that rising support level. So we're looking for something like this, kind of like an uptrend into this 20% margin for profit of about $330 per share is the price point, somewhere in here. And that's what we're looking for. There's no reason to risk it and just, buy when it's on its way down like it was. It's better to see that it is continuing its uptrend and that we want to get a good deal. So we wouldn't buy a stock if it's up here at this resistance, it's up at the top, it's overbought, if it was up here. But if it's down here around 270, then that's why we're going to see it as a good deal. So basically the margin for profit right now, we're talking 10, 15, 16% margins that would make sense for STRL to be one that we follow this week. So we'll definitely watch that one. I'm going to add that to my watch list too, and I'll probably add it over in our blue collar list. So more of infrastructure, building, things like that. Our construction list, essentially. Now, when it comes to UEC, so UEC is what Jose is shouting out. Looks like that's what Ron is looking to see. It's a uranium energy company. So they've had some interesting levels. Let's take a step back, see how the stock has moved. Yeah, so overall, when we look at this company, they're at all-time highs and a little bit higher risk, right, than we'd like to see. You kind of see these levels. I mean, it's hard to kind of map out when it looks like this. But you can kind of see this level like that. And then we see the recent trend. And the recent trend, it's already looking like it's at kind of like an all-time high, and it's starting to reach a top. So you kind of see this level right here. It's got this rising support with the exception of the dip we saw back in July in the greater market. And then you see this rising support level. So it's kind of sticking true, but it's at a resistance right now. So resistance at 1080, more of not a good deal. Do you see why that's not as good deal from a technical perspective? Kind of on that top there, looking more like it would sell back down into this $9 range, more like 14 to 15% sell-off potential. You can also just take a look at the RSI and the MACD down here. You see how they're way overbought? It's like 80 and 90. It's just pretty high risk buy right now. Not something that we'd probably look to get into at the moment. And Elvis says LUNR. We take a look, Elvis. Thanks for tuning in. Dylan says, could we please take a look at Lightbridge on the topic of nuclear? Yeah, we could take a look. UEC, though, just kind of finishing up their financials, too. Just want to, because it is overbought, but let's just take a look how they look. $4.6 billion company. Their revenue is very inconsistent and actually negative. Balance sheet, they got about $1 billion in assets, so they're up there, which is great. They're up into the valuation of $4 billion with $1 billion in assets, so that's fine. Uranium, I don't know if, like, I would personally rather buy like a copper company than a uranium company. I don't know. What's the thought process there? There's nuclear. Okay, so nuclear weapons that could tie in. What I know is that copper, for example, if you're going to buy something like copper would be in much greater demand due to like semiconductors. But when it comes to the nuclear space, if you're trying to, like right now, nuclear is not like booming. Like they're definitely looking at it and certain things are getting built. But is it a time when it's booming? It's booming. It's like really, really, really in demand. Like they can't get enough of it. I don't know if that's the case right now. I don't believe that. Like if you're looking to invest in a mineral, probably going to be better off buying copper right now than uranium. Just because like just the massive demand right now for copper. It's just huge. That being said, doesn't necessarily mean it's a bad play. It's just one that's probably more conservative. Their market cap where it is with the assets they have, it's okay. It's just not looking like one. It's like, oh, such a good play. There are people like Jim Cramer saying, yeah, it's a good buy because it's in nuclear. It's like, look at these companies, but I wouldn't say that you're going to see unproportional returns that would be favorable buying in right now. Especially when we looked at the chart. I mean, it's just way overbought, seeing that. So that's how it looks right now to me. Could be that they continue to run, but it seems like more of a temporary thing with how overextended we've seen them get over the last few days. So the other play, this was Dylan. He said, take a look at this one on the topic of nuclear, is Lightbridge. Let me see if I can find it here. Lightbridge. There it is, LTBR, from the topic of nuclear. So we see them kind of make some runs up into some highs of about $18 a share. See them kind of make this this trend here. And they recently pulled down. They kind of got back into this range here. It started to recover a little bit, and now making its push up. It almost looks like it's overextended on the short term. But let's take a look at the outlook for Lightbridge. So Lightbridge Corporation, fuel is the secret of nuclear energy. So they're very into nuclear. Okay, Oklo, Lightbridge to evaluate additional co-location opportunities for manufacturing advanced fuels. So they work with Oklo. So this recent article published, well, it was about a week and a half ago. It says, this follows a series of executive orders issued by the White House in May 2025 that prioritize the acceleration of U.S. nuclear energy deployment. Among the directives was a call for the Secretary of Energy to establish a program to process surplus plutonium and make it available for advanced reactor fuel. The proposed co-located facility would support the production of advanced fuels for both fast reactors and light water reactors, reinforcing both companies' commitment to U.S. leadership in advanced nuclear fuel manufacturing and recycling. So you could see this comment from the co-founder. He says, building infrastructure to help fuel nuclear development and its deployment in this collaboration, and it supports our efforts to bolster near and mid-term advanced reactor fuel supplies with legacy materials such as downblended uranium and repurposed plutonium. It directly aligns with the strong federal direction, support domestic fuel independence. So when it comes to the market growth, they're definitely seeing that happen. The industry is expected to grow double digits year over year, especially with the demand. A lot of people using power from the grid, things like that. If they actually dial in nuclear and it's safe, then the upside is huge to install this technology in places that would be, more that would be suitable for an install like that. Now, when it comes to this company, Lightbridge specifically, it looks like they focus on the fuel technology and less on the construction. They focus on the waste reduction, improved safety, improved economics, and that they are able to, the fuel that they use is that the internal temperature is 1,000 degrees cooler than the current fuel and does not reach the appropriate temperature needed to generate hydrogen gas in design basis accidents. So essentially they're saying our fuel is like, it's just way safer. They're also kind of a little bit of scarcity in their market research. They're saying China is adding the equivalent of today's U.S. power system to its electricity infrastructure by 2040. India is adding power systems, and they're kind of like, we don't want to be behind because we don't have the power systems. Check us out. And then they show, as we went over just a minute ago, you had like the bills getting signed by President Trump that we were looking at here with Oklo. I don't know if that was the other CEO we were just talking about was also in the room there. But interesting to see them, the U.S. is looking to put more money into the nuclear side of things, and that's probably why they're seeing the balance sheet increase. When you look at their balance sheet, they all of these companies we've looked at have had a lot of runway. STRL was a little off topic there, but UEC, I mean, you see $1 billion in assets. Everything takes energy, AI takes energy. There is energy behind all the words that get typed on ChatGPT when you ask it a question. And somebody's got to build infrastructure to power those things. So that's what's going on there. LTBR, though, when we look at it at the support level that it's at, if we were looking for maybe momentum to kick in and maybe see this continuation of an uptrend this week, there is a resistance level that's pretty strong currently. That's right here. You can see it's at about $15.50, and that's actually where it's at right now. So maybe we see, this level where it could sell back down into these support levels here at 12, 13 bucks. But really, if they break out above 15.50, they're trying to continue this overall uptrend and maybe make a run of about 20% margin for profit up into that $20 price range. So otherwise, we could see them sell down, get rejected 15.50, but it's a good level to watch. So we'll add them to our nuclear watch list. Make sure we got a good look at them tomorrow at market open. Cool. All right. Theodore says D Pro is looking for a turnaround. BAIG 2x leverage for BBAI just came out according to Crazy Carl. Is that true? What is it? Is it BAI? BAIG? Oh my gosh. Okay. Guys, we might end up trading some Big Bear AI more this week. It's the one stock we cover so extensively that we know their charts pretty well, because we cover it like almost every single day. And just this Friday or Thursday, they launched a 2x for Big Bear AI. That's pretty crazy. So we'll definitely take a look at it. Thanks, Carl, for the shout out, man. I appreciate you. Awesome. Okay, so the other one, Marty Clark says LEU. Centrus Energy. I think we've looked at this company. All right, let's take a look for Mark. So they've had some pretty strong levels reach up into that 264. They recently pulled back here, Marty. So you see a uptrend. I don't know what type of company this is, but they were in a very consistent uptrend, something like this. And we saw them break pattern recently. Could have been the greater market. Kind of see them uptrend, and then just broke pattern. They're now selling down, trying to find a support level here. It's previous resistance, support at about 165. They did bounce. They started to push back up. Now they're trying to break back above that 200-day moving average, that green line. That's going to be the next level of resistance, which is a previous resistance at $200 a share, along with a support level, so previous support acting as a resistance there, right around $200 a share. So for LEU, if they were going to continue up into those levels, maybe a 5% margin, but pretty heavy resistance. You do see the RSI and MACD down here. You see this pretty overbought right now, above where we normally like to get a good deal or entry. So it kind of looks like maybe they would have a sell down, or maybe get rejected at this $200 price point. So a little higher risk, I think, with their current price. They kind of started to sell back down, but we could take a look at them a little bit more in depth from a fundamental perspective. So, the markets they're in is in energy. So we kind of talk about energy quite a bit, especially today. They're kind of in, it looks to be uranium as well. Revenue, 150 million a quarter, around 450 a year, 450 million, and $1 billion in assets, but pretty high liabilities. They actually only have just about 160 million in equity, which is not a lot. $3.4 billion company. So, PE ratio 30, little bit high, not bad. But LEU seems to, from a financial perspective, they look okay. They look good in the last quarter, though. Revenue spiked to 154 million, and a net income that was positive. So not a bad play. If they are going to face resistance, it's going to be about $200 a share, and that's really just it. Marty says BBAI is extremely easy at this point. Yes, some of us have had a lot of success in BBAI. Others that not always is this the case, but sometimes what happens, like it happened in the quantum market, and it makes you feel a little bit bad. But what happened was like we started covering Rigetti stock and D-Wave and IonQ when they were all maybe at like Rigetti was $1 a share. And what happened was, we started covering, if I go over to quantum, and it is kind of unfortunate, but this almost always happens when we're covering markets. And I try to warn people, like we made a lot of videos covering that there is things to watch out for before earnings. But like we started covering Rigetti when it was $1 a share, right? When it got up here to like $20 or somewhere in here, by this time we were already looking at it and we're saying, it's at an all-time high. This is all-time high. Like if you're in a short-term position, you got to manage your risk. But by that time, everybody, thousands of people were watching the videos, and it didn't matter. Like the whole video could be about selling, and they'll buy it, and then we saw a crash. Now the crash was pretty freak, and it recovered fully after that. And it was because of an announcement specifically from NVIDIA about quantum computing being 30 years away. Then we see after that crash, which a lot of us bought. I don't know if my dad's around, but I got him to buy on this dip actually. And we saw a full recovery basically almost up to these levels. So it took time. But if you're not in it for the long term and you just join when a stock's at an all-time high, you're just discovering it and it's at an all-time high and you're buying it without a plan, then you could get caught in some tough spots. So that always could happen, but that's why it's important to not really think about it too much and just have a plan. So long term, all right, keep buying it, hold it, get as many shares as you can. If it's a short term play, know what your risk tolerance is. So guys, my camera died for some reason. I don't know what's going on. Could be because we were traveling. But I appreciate you all. We got time here for one more. We're going to jump into LUNR stock here for Lemus. So LUNR, this is our last one, and LUNR is a space stock. So we got to cover some good AI-driven, or some companies driving AI and energy. We got to uncover 3 ways that people either lose, fail to accumulate, or accumulate funds during these markets. And now we're going to cover this space stock here, Lunar. So Lunar stock, they are a company that's building space tech. They have partnerships with the US government, and they have some infrastructure they're building on the moon. So they've actually done some explorative missions where they're putting bases on the moon. They're also helping the new companies that are launching satellites up into space to be able to transfer people and goods from satellites to satellites, or from different space stations to different space stations. And LUNR recently sold down to the support level. It's a rising support level in their market cap, and it's about $8 a share is where they bounced. Now they're at $9 a share. Just a few weeks ago, they were at $13 a share, and then back into March, they were over $18 a share. So they've seen these levels, and recoveries into those levels would be about 100% increase or more. So the upside is there. When you look at their company from a financial perspective, we've seen that for a space company, they're doing pretty good. They're making about $50 million per quarter. Annually, they're bringing in about $228 million, and their balance sheet's good. Total assets are up. So the balance sheets and things like that look fairly good. Then you have what they do that's bringing in the capital. Where are they making money? Where's the cash coming in? You can see their focus is delivery transportations in space, so satellites, instruments, and destinations in space. rideshare delivery and lunar surface access. They do data transmissions and infrastructure as a service. So they're doing moon landers, the Nova C lunar lander that supports current market demand for precursor missions and is preparing cargo and resupply for sustained human operations. So it had been, 50 years since the human race had been to the moon. We said, hey, let's do it some more and start, getting up there some more. And you see them have these lunar rovers, and they recently signed a deal late July for 10 million. They got some more navigation services, and they just submitted a proposal for NASA's lunar terrain vehicle delivery, which is a new contract they could potentially secure. That would be, it says Intuitive's Machines, which is lunar racer team proposal, builds on more than a year of integrated design, engineering, and testing following the company's $30 million award in April. So they're getting money, they're getting deals. So looking forward to seeing them continue to work hard on what they're doing. They currently have about 435 employees, and their market cap's fairly small, about 1.6 billion. And they're one of the top space companies to be looking at alongside companies like Rocket Lab. Definitely would want to continue to watch Black Sky, as they're in super high definition AI driven satellite imaging. Planet Labs, which is one to watch. Another one is ASTS and Redwire. ASTS has had some really interesting developments with their 5G space cellular. So some of the ticker symbols, you could screenshot it. It's on the screen. You could see the space tech companies. These are the top space tech companies in the world. If you want to take a screenshot, go ahead, take a screenshot. These are the ones we're watching for this week. And a couple trades we went over for this week, we'll be covering them tomorrow at Market Open. If you guys would like to join us there at Market Open in Stockmate, it's the second link in the description down below. There's a huge sale there, so if you want to take advantage of the lifetime access, just click the link, simply take a look. It's the second link in the description. And then when it comes to the video, if I earned your thumbs up, hit the like button to consider subscribing, and I'll see you guys in the next video. Take care.